Companies like Facebook, Apple, and Google have all led the initial downturn. And with the Bay Area so reliant on tech, Melissa Kane joins us now to break down what this means for us. Melissa?
Yeah, so we talked to an expert who says the stock market plunge is making some Bay Area businesses step back. They're delaying new projects and putting off hiring people. They're waiting for the market to bounce back and hoping that it does.
I think we're all a little nervous whether we're in the Bay Area or the rest of the country right now because, we don't know exactly where the bottom of this is.
Jim Wunderman is the president of the Bay Area Council. It's a consortium of about 325 large businesses, nearly all headquartered in the Bay Area. And what he's seeing is his members hitting the pause button.
What happens when you see this much loss of market value is companies are going to be much more hesitant to invest. Definitely, you're hearing this kind of talk. Let's a little more patience out there when it comes to taking the next step.
While the Bay Area does have a diverse economy, we are especially sensitive to losses in tech.
But a lot of the economy is built around tech, and I think if you see a downturn on the tech side, it's going to affect the whole Bay Area economy. There's no way around it.
He says the underlying economy is strong, so the markets are being spooked by something else.
We haven't seen this much uncertainty heaped upon itself, I don't know if ever.
Recent events like the government shutdown, the plan to withdraw troops from Syria and Afghanistan, General Mattis leaving the cabinet, they all seem to come out of nowhere, and markets do not like unpredictability.
So it's not surprising that this much uncertainty would have a big effect on the downside on Wall Street. If it didn't, you'd kind of wonder, are people not paying attention? Mm-hmm. So, maybe those things will even out, but I think there's some concern that they won't. And, the things could even unravel more.
He says investors aren't gone forever. They're watching what happens next.
It's just going to wait till it's, the storm blows over. Hopefully it does that.
Now, he says even if there is some sort of longer term issue, the Bay Area economy is strong. Well, just look at our high housing prices. They show that people and businesses still think this is the place to be. And also that we need more housing.
Well, yeah, that's no headline there. But we do keep hearing that these stock prices, what's happened in the past few days, bear some resemblance to what happened in 2008, but the reasons are different.
That's right, and that's why we're not seeing the same effects as in 2008. What Wunderman said is that in 2008, there were problems with the economy, things like those useless mortgage-backed securities. So the stock market went down because it was devaluing companies based on underlying problems. But right now, we don't have those underlying problems. Our economy is actually strong. The stocks are going down for other reasons, and that's why we're not seeing foreclosures and banks going under, even though the stock market may look similar to 2008 on some days.
All right. Stay tuned. It's going to be a bumpy ride. Thanks, Melissa.
Yes, it is.